All right, guys, welcome back. This is part three of the Swing It strategy. If it's the first time you're actually watching this video and you haven't seen the previous two parts, I recommend you skip this video. Just go to the playlist that I have created especially for this strategy and start from the part one, okay? Since this is the actual part three. All right. So basically, guys, as I was explaining you here, this strategy is based on a 4-hour time frame. We cannot move it, okay, since this is going to be swing it. And I don't want you guys to get confused. If you scaling to 1 hour or you try to pay attention to something else in a 1 hour or different time frame with these indicators and all of this, it may be something else. It may be another type of strategy. It may be other, or it's going to be something else. It's not going to be the swing it strategy. Okay, so that being said, this I did show pretty much in the two previous videos. It was pretty much Nasdaq. All the analysis I was doing was on Nasdaq. You can see the Nasdaq has a nice trend on a 4-hour time frame, and you see that several times uh, the price does this touches one, two, three, four, at least four times has touched it in the past. Now, right now, we could be close to actually do another touch. Now, I wanted to show you also US 30. I want to jump on US 30. Okay, see how different is US 30 from the others. So right here you see that in fact US 30 did a touch here. It went very low, this low right here. That's why it's important also to use your support, where is actually your support, to see in the past where it's going to go. So this could have been a nice buy right here below that. This was a nice buy that I actually did this one. I was able to catch this bullish flag right here. So several ways to actually make this type of entries and hold it. Right now, you see that actually US 30, we are now below the 600 on a 4 hour. So, what do you think is going to happen? What do you think is going to happen? Right? This is a nice zone. This is actually a daily zone right here. The market is touching right there. So, we could start seeing some type of rejection. Now, one of the rules here, you can see, I think is, let's see, secure profits halfway up and break even. And if price breaks 80, okay, right. This is one of other things because sometimes, you see how often, like after this push, when did it touch again, at least at US 30, right? When did it touch again the 600? Right here. So how long it took for this thing to actually reach again this thing? So 229 days it took for the market to actually come back down to the 600. So can you imagine, the big push right now? So, but then very often this was the correction that we recently had. The market was actually playing around below the 600. So you see, US 30 is kind of like a little bit different than Nasdaq and S&P 500. But still, there was these things were happening that affected in China, affected a lot. So one thing you can do, and part of the rule is you can actually do this. Sometimes you may not want to actually wait for the market to reach the the 600 because it's very far away, like at least for US 30. So one thing you can do is if the market breaks to the downside, breaks the 80%, not the 80%, the 80 EMA, you can actually try to get some buys somewhere right here below. You can actually try to find some buys. Okay. And for that, we could spot, as I mentioned, we could spot some type of divergences. Like you can see here, this nice divergence. When the market drop right here, you see that divergence right there, right? So the thing is that it's going to be a little bit more different. It's up to you if you want to do it, if you want to do it this way, because there is no much thing that you can see here, right? Unless you can go in the past and see if there is some type of support or resistance. You could say there was something here. The market did reach this zone, so you can even stretch it all the way here. Okay, so that's a nice zone right there. So you see that rejection, and you enter in the next candle. bullish engulfing. It's it's not a pretty entry. Definitely, it's just more of a, you know that the market is below. You are seeing the divergence. You know that the market is reaching a nice support in the past. So you can right there you can go 1 to 2 risk to reward. Okay, it's not a pretty entry. I have to admit it. It's not the best entry, but it's something you can do. So when the market you see right here, it drops again. You can go in the past to see if there's something. There's always something. If there's nothing, you can just let it go. Don't make an entry, right? If you don't see something nice, you just don't enter. Or if it breaks below the 80, right? Sometimes you can spot something like this. For example, you see this breakout, and you see all of a sudden you see that big break. See, this was a nice zone here. You see, it touched, it was a resistance, and then it's coming back to test the zone, and now it's giving you that big ass 4 hour bullish engulfing candle. That's a good sign right there. That is a good sign, definitely, so that you can actually go 1 to 2 risk to reward. Now, pay attention to this. This is why I tell you go 1 to 2, right? Because when you go 1 to 2, you know that when once you reach halfway up, you know that you need to secure profits and a stop loss to break even. Okay, so the halfway up is somewhere here. So right here you could actually touch, and then look what happened. Immediately went down. It could have most likely stop you out. Okay, so but there you go. You have at least reached this first TP, which was how many pips? This is a lot. This is 715. Oh my goodness. 715 pips right there for US 30. So again, price drop again, and look at this nice drop. The price actually did reach the zone again. And now you see that trigger right there. You see that pin bar, and we are touching the 600 SMA. So there you go. You got an engulfing candle. Boom. You got your sign right there. 1 to 2 risk to reward. Okay. It was a nice entry as well. Sometimes we this is actually part of the rule as well. Pay attention to the big peaks, to the volatility. Where is it? Right here. The sixth rule, it says pay attention to the aggressive meltdowns. So sometimes this is an aggressive meltdown. So I'm pretty sure at some point we could have an aggressive buying now. Okay. Now pay attention to see what's going to happen at this zone next week. Okay. If we see a bullish engulfing candle, a 4 hour bullish engulfing candle, we can definitely be looking for a buy. We can take the risk and actually make the buy. Okay, somewhere around. Let's say we spotted a bullish engulfing right there, stop loss below. Take profit 1 to 2. Okay, something you can do. Since we are now playing, we're going actually below. We're deep below the 600. So you see that not normally goes below. A few times goes below a coronavirus right there. So let's see what's going to happen next week. Let's go ahead and take a look right quick at S&P 500. As well, you see that nice breakout in there. This S&P 500 is also really nice. You see that nice trend. The price is normally very on top, but you see sometimes the market doesn't actually, and not sometimes, I would say, when was the last time the market was actually uh, touching the 600? It was a very long time, 322 days up before the market came back down to retest, actually touched the 600. So you see, you don't have that many opportunities to actually get big buys. So guys, I want you to take that into consideration. Whenever the market, you know, is reaching, at least on S&P 500, now you can see is reaching that 600 line. Guys, prepare for a buy. Okay, prepare for a buy in long term. What are you seeing right there? The market is clear some things here. So the market is doing that big pullback. Again, what do you see there? You see that divergence. The RSI won't lie. Okay, look at that. Price is creating higher highs, and right here is creating higher lows. Okay, so there you go. This drop right here, you see the RSI also predicted that low. The market was dropping pretty much all the way here. It was creating higher lows, and right here from here to here, basically this it was like horizontal, kind of like creating little high highs. You see, it was actually high high, high high, high high. So it was pushing up. Meanwhile, right here, it was creating higher lows. So there you go. You have that big divergence in there. It predicted the drop, and then it predicted the push. It predicted the actual, the correction. Look at the divergence here. Right here is creating higher lows, and right here is creating. I'm sorry, lower highs. Is it lower highs? No, higher lows. I'm sorry. And right here is creating lower lows. So you see, it was a good sign actually right here to buy. You are playing. You see, the market is just going below the 600, right? A good opportunity could have been here. Let's see what good opportunity. Right now is it was just a consolidation. The market touched multiple times. You see, let's take a look at price action. So it's going down, pullback, push, pullback. That push is touching again. That again another pullback. But still, we're kind of like doing the same thing. So no reason for us to buy right here. Right here, it actually start to break, and this candle closes almost the same size. Yeah, I would not enter there. Maybe this one right here could have been your actual entry. If you wanted to do this type of entry right there, your entry would have been here. Yeah, it's a little far away, I know, but that would be how the candle closed. It closed above these highs right here. So it created the first high. Stop loss below this zone. Yeah, you're going to tell me that that's a lot of pips right there. But um, it is actually a good sign. I would definitely do this. I would definitely take the risk for this one. After seeing also the divergence right there already, the market is getting ready and now creates the first high. So it's breaking again on top, is going back on top. You see that entire candle close above or 600, and plus is also kind of like breaking above the 80. So I will definitely take the risk right there. 1 to 2 risk to reward, and fall. It did a pullback, and guess what? That nice pullback again. If you're, if you have been following me for a long time, you know that is a nice flag right there. It's a nice bullish flag. Okay, so you enter on the breakout. Wow, you could have made another buy right there. Stop loss below the zone and take profit. I don't know, two previous highs, 1 to 2 risk to reward. Or you aim to previous highs or record highs or another zone, or you want to do it to that one. I mean, at that point, look at the 80. Look at that push right there. Look at the line, you know, all the way to the top right here. You could hold it. You get scared as soon as the market starts touching or getting actually close to the 80 again. That's when you would actually close. If you're willing to actually hold all that, you can. There's no problem with that. Okay. So this strategy, guys, it will definitely help you swing the hell out of the markets. Okay. Look at the 80s as well, because the market sometimes, as I mentioned, is not always going to be touching the 600 because it's very low. The market has to be very cheap. Sometimes you can find opportunities, as I mentioned, uh, just by breaking the 80. When it breaks the 80, and you see, look at that big engulfing candle right there. So you could have actually make a buy on that engulfing candle, stop loss below, take profit 1 to 2. The market did reach halfway up, so you could have break even. You secure profits at that zone right there, and then break even. Most likely you got stopped out on break even right there. So price went down again. You see what the market is doing now. You see what the market is doing. Where is it? Okay, so that massive drop. You got a pullback. It was a little double top here. So right here, it failed to create a lower low. So it created the first higher low. And you see that trigger right there? You see that bullish engulfing candle? So it did a pullback. Now you have another engulfing candle. So you could have either enter in this one or enter in this one. Okay. So either both, you could have entered either here on that engulfing or this engulfing. So two signs right there. The market is now creating higher highs, higher lows, and most likely will create a new high. So right here, it gives you that confirmation. It created a new record high, not the new record high, the higher high, higher than this one's right there. So it came back down to retest the actual 80 EMA and then just continue pushing up again, going 1 to 2. So it's an option, guys. It's an option because, like I mentioned, not all the time. This is not for all the time. This is swing trading. So this is for you to watch it from time to time. You constantly, or most likely, you're going to be doing your scalping thing during the day. But I recommend you from time to time take a look at a 4 hour time frame, and with these indicators, pay attention where the market is. Is very low? Is it trading low? Do you think it's very overbought? Take a look, and perhaps you can catch a nice sell. If you see that the market is very overbought, like right here, you see how separated from the 600 line is. So you can take a look at the RSI. If you're able to spot some type of divergence, you can actually go for a sell, you know? And if you're into it, if there's no problem with that, you can definitely go for, try to spot a sell. So you can go for sells as soon as the market starts actually breaking below the 80. Okay, don't go for a sell somewhere around here because it's too dangerous. This could still continue pushing up. Not because you see a divergence means exactly that it's going to fall. Okay, not all the time. Remember, there's no perfect thing or perfect indicator. It's just it's a nice indicator, but it's not perfect. You could get faked out sometimes. So the best thing to do in that case, if you want to go for a sell, then you wait for the entire momentum candle. You see that big momentum candle dropping and closing below the 80 right there. You see right here there wasn't much momentum. It was consolidation, up and down, up and down, up and down. So no reason why would you sell in this point. This could have been a good sell because you see that big momentum breaking just one single candle. Like how many pips was that candle? This is huge. It was a well, it's S&P 500. So normally S&P 500 it has less pips, so about 48 pips. But it was a huge drop breaking. So your sell would have been there, stop loss above, take profit to previous zone, perhaps this daily zone right here. Okay, if you're into that. If you just want to wait for buys, guys, we're very close to be looking for an actual buy again, to be able to actually hold it for a few days, for a few weeks, or a few months, okay? Depending on what you're doing. As I mentioned, if you're into scalping, you can always spot nice swing trades and just let them open. And you can scalp all the way to, while the market is pushing up, you're going to find flags. Okay, so you can do your thing in different time frames. You can spot flags, um, corrections, price is pushing, and you're going to see, meanwhile, the price is trading above the 80%, the 80 EMA, you can actually be looking for buys, continuation, okay? So that is basically it, guys. See if I can make more videos about this swing strategy that you can actually use from time to time, not all the time. Remember, you're gonna be the market is gonna be very cheap, not all the time. But once it goes very cheap, you have an opportunity there to actually shine. So I love actually Nasdaq and S&P the most right now. So what do you think is going to happen now with Nasdaq? Is it going to drop? Is it going to reach this previous highs? Is it going to get closer to the 600? Let's see what's going to happen next week. But I want to hear your comments, guys. I want to see what you think about this strategy. I want to see on the group, if you're following me on Telegram, I want to see, I want you to reach out to me and tell me if it's working for you. What do you think? And that would be all pretty much for this video, guys. Again, thank you guys for watching. Follow me on YouTube. If you're new actually watching these videos, just follow me and don't forget to give it a big thumbs up. It motivates me to keep posting videos like this and showing all the strategies that I'm using. Okay. Thank you guys for watching. Take it easy. I'll see you guys in the next episode.